Sztanyo Clanyo, what is going on? Happy Sunday evening. Welcome into Team Sztanyo Live. We got an exciting show tonight. I'm very interested to talk about this topic of, are we in a real estate bubble? Is it going to crash? Is this the weirdest real estate bubble we've ever seen? And if so, why? I've got all sorts of interesting facts to share with you guys and data to help you make the best decisions for what's going on with you and your real estate, whether you're looking to buy or sell or move to the area. Lots of good stuff to share about, but let us know where you're watching from. As always, love doing these lives to be able to interact with you guys in the comments. So feel free to share. I better turn this thing on mute. So I've been getting blown up all weekend. It's been a busy weekend. Hope you've had a good weekend. Team Sztanyo is off to a crazy start, I would say, for 2025 here. We had our best year ever in 2024. We were up like crazy, up like 40% on the year versus our previous year. And a lot of exciting things are happening for the team here. We just brought on another agent onto the team, which I'm very excited about. Brand new agent, and she's just getting her career started. And I think she's going to be amazing. So I'm excited about that. We're growing in some other areas. We've hired a new videographer. If you guys have been checking out the YouTube channel lately, you may have noticed a bit of an uptick in our production level, and that's not because of me. That's because we've got someone really talented helping out. So that's been awesome, and we're growing the administrative team. Everything's growing, and this weekend has been busy. We had a lot going on this weekend. My wife took my oldest son to a state forensic tournament. He was in an improv duo in state finals near Western Kentucky University, not near, at Western Kentucky University in Bowling Green. So I had my other 4 kids was holding it down this weekend, dad duty on my own. And at the same time, we had 2 listings that went live on Friday. I had some first-time home buyers Friday night who went and saw a house and just hit the market. First-time home buyers, and we were able to secure it and get under contract. I am super excited for them because their financing, was the kind where it can be a little bit trickier. And so I think they've got a really great house coming to them. So Friday night, we got them under contract. And then both of my listings this weekend that went live, we have been in multiple offers all weekend long. And so, so are we in a real estate bubble? We're going to talk about that. But at least for our sellers, we did a great job pricing those homes properly and making sure we did everything we can from the marketing and the strategy standpoint to get a lot of we had open houses in both houses this weekend, and we're in multiple offers over asking. One of them's already accepted, and I've got to talk to my other sellers a little bit later tonight and kind of review some of the offers we have on that one. So it's kind of a crazy market. Let's talk about it. We're going to do something a little bit unique tonight. I've got the slides from Gary Keller's family reunion that are showing data from all across the country for the last year. So I'm going to dig into those. At the same time, I came across an interview today, not on a kind of a news channel that I listen to occasionally. And I was like, oh, this is really good. And with it, it was an economist, a housing specialist talking about the real estate market nationally, talking about the fact that this is a very weird bubble, but also talking about the fact that, hey, that bubble is going to burst in certain places, but not in other places. And so what I want to share with you guys tonight is that going to bust in Cincinnati, Ohio? What does that mean for you? Cincinnati, Northern Kentucky. What does that mean for the prices for your real estate? Now, we obviously know that housing prices are way up, but is it going to burst? So that's what we're going to get into tonight. I'm going to try this audio. You guys let me know if this works. I'm going to bring this up right now, actually. Let me know if you guys are in the chat, if you wouldn't mind. Like I said, feel free to give comments as we go here. But let me know if you can hear this.
Interest rates dropped this week to their lowest point since October last year, sparking a 20% surge in mortgage applications. While housing remains unaffordable for many, some real estate experts say we're on the precipice of a market crash, but only in certain regions of the country.
In this episode, we speak to a former Wall Street analyst and financial author about why this housing bubble is unique and what he expects to see in the near future. I'm Georgia Howe with Daily Wire Editor-in-Chief John Bickley. It's Sunday, March 9th, and this is a weekend edition of Morning Wire.
Rachel says thumbs up. We're good to go. Thank you, Max. Awesome. Okay.
Joining us to discuss what he's calling the weirdest housing bubble ever.
I might have to do this I listen to everything on 2 times speed. So if this is really slow for you, but what we're going to do is listen to this, and then I'm going to dig into the charts from Gary Keller and show you the data. And then I'm going to synthesize that down locally here to Cincinnati. So I've never done something like this. Forgive my my production level. I don't have the hired producer yet, but we'll go through this because I think there's some really
financial analyst and 5-time author John Rubino. John, thanks so much for coming on.
Right, I'm gonna bump it up.
Oh, sure, Georgia. Good to meet you.
Nice to meet you too. So you had a recent Substack where you said that we are living through the weirdest housing bubble ever, and you outline a few reasons for that. Particularly, you point to the age of first-time homebuyers. Can you unpack why this is such a unique time for homebuyers?
Well, yeah, normally the way a bubble works is that the price of something starts going up and it keeps on going up. And eventually people get so excited by the rise in price that they experience FOMO, fear of missing out, and they start piling in. And you get a lot of action as the price goes up. But houses have become so unaffordable that the market is kind of frozen, even though prices are just insanely high. And a normal person, especially a normal young person, cannot afford to buy a house in the United States right now. And the median age of home buyers now is in the 50s.
Okay, whoa. I'm gonna stop that right there. Medium age of home buyers is in the 50s. At our Keller Williams family reunion, Gary Keller shared that the average first-time home buyer age is 38 years old. That number blew my mind. That blew my mind. We're gonna keep going to this, and I'm gonna show you guys some of the data, but that's just a little start. This idea that like it is really hard for people. The affordability is just crushing people, crushing first-time home buyers across the country. But there are some unique, there are some unique pockets across the country.
It used to be 30 or so, 30, 35-year-olds. And now the only people who can afford to buy a house are basically people who are at their peak of their lifetimes of earning and have a lot of money saved. So you've got a market where even though prices are at an all-time high, the amount of deals being done, the amount of homes being bought are at 1990s levels. Even though we had 50 million fewer people in the 1990s, that's the level of home buying and selling that's going on right now.
And what are the reasons for that? One thing that comes to mind is there's sort of some consolidation among.
All right, I'm going to show you what he just said. Give me 1 second. Let me add this. Okay, so I'm going to show you guys this data here. This is from Gary Keller's vision speech. I'm going to go through some home sales, home prices, and market inventory here. Okay, so this is last year, 2024, and the orange, the last year is in pink, and 2024, how many home sales there actually were last year, and 2025, this is predicted. So you see going back, just to give a little context here, going back, where we saw the most home sales was really leading up to the Great Recession. So 04, 05, 06, then 07, they came down. 08, we had the recession, and then slowly kind of built back over the last dozen years or so until COVID hit. And actually in 2021 is when we had our greatest amount of home sales. This is per, let's see here. I want to get this out of the way. This is per million. So 6.1 million. Then it dropped in 22. And then the last few years, as we've been hitting both low inventory and affordability issues, right? Those two things combined has caused the last few years of home sales to be down really since levels back in the 90s, which is what this expert just said. So 4.1 million, even though we've got 50 more million people in the United States than the 90s. So that's home sales annually. And the big reason is this, right? The big reason is home prices have just shot up the last few years, specifically right at COVID. I mean, they typically go up. The only time we've ever really seen home prices go down significantly was the Great Recession here, 07, 08 really through 2013 is about when they came back. It was about a 5-year period when home prices went down and then came back. But previous to that, really the only other time home prices significantly went down was the Great Depression. And so they kind of steadily went up after the Great Recession here from 2012 up to 2020, and then they've shot up, right? They've shot up the last 4 years. Normally this curve is 4% growth. That's the long-term trend. But in the last few years, it's 9.9%. And so that's going to indicate some things here of what is to come. Because normally home prices don't go up this fast. right? Normally home prices are around that 4%, but the last few years we've shot up. So are we in a bubble? Is that bubble going to burst? I mean, we're going to keep going through it here. We're going to talk about the factors why, and we're going to specifically look at the data, but I would say, yeah, especially in certain parts of the country. So let's keep getting into, there's one other thing I want to show you here, which was, let's see here. Here's kind of home prices, same in terms of growth, annual appreciation. This is home prices appreciation, how much they've gone up, but they kind of slid down a little bit last year. Total market volume, and then inventory. So we'll get back into these slides. We'll talk about mortgage rates, etc. Let me get back into the audio, and we'll keep listening here. All right.
Older people buying multiple homes and younger people buying none.
Well, kind of, that explains what's happening. But the reason it happened is inflation. We basically debased the currency. That means the price of things, when measured in dollars, goes up. And houses are one of the financial assets because you use debt to buy a house, which makes it a financial asset. So house prices have gone up faster than the salaries of most people have gone up.
House prices have gone up faster than the salaries of most people have gone up. You guys feel that out there? I know a lot of people are feeling that out there. And inflation has just been crushing people, but house prices are tied to inflation. So he's going to keep talking about this. But when you have inflation, home prices are just going to keep going up because
houses get more and more unaffordable with time. And that's not a function of houses changing in any fundamental way. It's the value of the currency going down.
I saw this thing on, I can't remember if it was Twitter or Instagram or where I saw it, but it was the same house resold about 5 times in the last 20 years. It's the same house, right? It's the same house again and again and again. But it was like first sold for like 270, and then it was like 350, and then it was like 480, and then 540, and then it just recently sold for like 680 or something like that. Did the house change? No, like nothing about the house change. It's this idea about inflation. Ryan, I don't have a specific link to this data. You could probably Google, if you Google Keller Williams family reunion vision slides, you might be able to find it somewhere. This is a slide deck that's supposed to just go out to real estate agents. So I had to kind of dig around for this because it's really good. But if you contact me directly, I'd be happy to kind of share these slides directly. All right, let's keep going here.
And what this does is it benefits the people who were there at the start of the inflation, basically baby boomers, my generation.
Yep.
We own a lot of the financial assets. We own the houses, we own the stocks, and we own the gold, and all of those things are going up dramatically. So we're getting richer while the younger generations are being impoverished because they can't even afford the basics of adulthood right now.
I went shopping this weekend and got a dozen, I got 18 eggs because I'm like, maybe it's a better deal. It's not. And I believe the eggs were $8.50. For 18 eggs. I made eggs yesterday morning for my kids, and I was like holding the eggs like they were gold. Like I was like, my son usually makes eggs. I let him, and I'm like, yeah, whatever, it's $2. And now I'm like, oh my gosh, okay, everyone only gets a certain amount of eggs.
If you're a 30-year-old and you want to start a family and buy a starter house, good luck, unless you make $250,000 a year, and very few people at the age of 30 do that now. So we have basically screwed over younger generations while enriching the already rich. And that's what inflation does. And that's why it's so insidious. The housing market is a perfect example of that. So,
okay, he's going to keep going here. I want to point out again what he said. He's a boomer, and he's saying, hey, the boomers are getting richer because we own the assets. And sucks to be a younger generation. And I get it. Every generation's had their own problems. The younger generation right now, it's really hard to buy a house. It's really hard to get hold of an asset right now because the affordability issue is so tough. And this guy is admitting that. He's like, yeah, look, this is tough. I'll bounce over again just to show you guys kind of these inflation slides. Give me 1 second. Add this to the stage. Okay. And so here's where we're at: inventory, mortgage rates, affordability. Okay. So he was just saying is like, it is so hard to afford. What this line is, I'm going to have to get over here real quick. So I can make sure, sorry, I can't see it on the screen. Mortgage rates. Okay. Affordability. Okay. So the orange line is principal and interest as a percent of income. Okay. And so the historical average from 1972 to 2023 has been about 27%. From 2000 to 2023, that was all the way down to 20%. And so when you had those lower interest rates and, home price is not as high, the home price was just a smaller percent of your overall income, the principal and interest as a percent of income. Currently, that's at 32%. The last time we've seen that is in 2006, right? Right before the Great Recession. So that's like warning. Previous to that was 1981. And, the big reason for that was inflation skyrocketed up then. Let me try to get back to these inflation slides real quick. Where were we? Did I skip it or is it ahead? Sorry, give me 1 second. Home sales, home prices. Okay. So I'm skipping ahead. Sorry if I'm making you dizzy. Okay. Here's where we are inflation wise, right? This shot up during COVID to, the CPI, which includes energy and food prices. We were at 7% and then maybe, around 6%. And so everything just shot way up and home prices went with that. Let me go back to home prices here. Bam. Oh, those are Canadian. Oh, I'm sorry. I got the wrong. I'm like, why is this not? Let me go back here. Home prices. Okay. This is what I was showing you, but 9.9% before. All right. I'm going to go back. I'm sorry for making you dizzy. I promise you, I'm going to try to not make you dizzy from here on out. Let me add this to stage. And let's get back to this.
Where we go from here, though, I think is the really interesting part of the story, because people are starting to put their houses on the market now, but they're doing it at current prices, which means nobody can buy them. So inventory of homes for sale is starting to pile up in a lot of formerly hot markets like Texas and Florida. You're seeing a lot of people try to sell their houses, but there are no buyers. And so what happens then normally is that the people who are trying to sell their houses, some of them pull the house off the market in disgust, and others cut their prices.
I just want to recap that real quick. So there are places around the country that got really hot, right? That they saw a boom. Florida and Texas. A lot of people moved to Florida and Texas the last few years. And now some of those people are trying to sell their house, but people can't afford them because the appreciation in the last few years went so high that it's out of reach for most buyers. And so what are you going to see? What are you going to see in those areas? You're going to see either a lot of price cuts, or you're seeing people pull those back off the market because the affordability is not there. So inventory is stacking up in those areas and prices are coming down in those areas. All right, let's continue.
And this sets off a panic in which people who really need to sell their houses basically have to sell them for whatever they can get for them, and prices plunge. And so we're headed for a time like that as inventory builds up dramatically in a lot of formerly hot markets and people get ready to start panicking.
All right, this is a bubble, right? That he's explaining a bubble is when inventory starts to stack up because people can't sell it, then there's a panic. And so when you do try to sell, prices don't go down, they don't go down as slow as they went up. Prices go down quickly because people start panicking. They're like, well, I've got to sell that. My neighbor put it up for $450. I've got to sell it at $440. And then they cut to $430 and it's like boom, 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 boom. And it comes down really. That's a burst, right? That's where a bubble can burst in a real estate market.
And are we seeing delisting rates climb? Is that where that comes in?
Yeah, delisting rates are starting to climb.
All right. So what are delisting rates? It's when a seller puts their home on the market, but they can't sell it. So they either cancel the listing or it expires. Okay. So they're delisting it from the market.
And that's a sign that we're topping now, that all the things that happen normally at a top are beginning to happen. More listings coming on the market, more delistings as people can't sell their houses. Oh, and there are also a lot of price cuts. You go to Zillow and you'll notice that a lot of houses have already been reduced.
Now, you and the Wall Street Journal highlighted that there are some very significant regional differences in the real estate market.
All right, this next point, this is fascinating to me, and this is the part where that other data I think is important. You'll probably see those headlines. You will of course see those headlines across the nation, right? Where inventory is going up and prices are getting cut, and the market's being burst, and the bubble's being burst, and there's a market crash because people want to make headlines. But that is happening in certain places. Now he's going to start to talk regionally. And so this is why I was like, oh my gosh, I've got to share this with Sztanyo Clanyo. So here we go.
For example, Florida and Texas have an overabundance of supply, whereas other places have a persistent shortage. What's causing that?
Well, there's just been a lot of action in Florida and Texas and a few other states. Those are the places that people have been moving to, and where a lot of houses have been built in response. There's a tremendous number of new houses in the process of being built there right now. So in other words, the bubble markets, the really hot markets, are the ones that break first and where the real action is.
Okay. The bubble markets are the ones that break first and where the real action is, because inventory is creeping up and because they had so much demand the last few years, and there's a lag between demand and builders being able to develop land and start building. So now in Texas, in Florida, they've been building up, and now this supply is starting to happen. And that's exactly what happened in 2007, 2008, where there was so much demand. Anybody could get a loan, right? And all the builders were building up a ton of supply. And then when the bubble burst, you had all this supply. Then you had jobs get nailed, so people couldn't afford. Then you had foreclosures because people were losing their jobs. And now you've got an oversupply, and the market just bursts, right? Everything comes crumbling down. Prices start falling kind of in a free fall when you've got an oversupply of inventory. Now, we haven't been in that place in years in here in Cincinnati really since 2010, like 2011. So it's been 13 years and it's been very steady. Now, do we have an oversupply here? I'm going to talk about Cincinnati specifically going forward, but let's keep listening to what he has to say.
Now, is the migration of people moving to those states slowing?
Yeah, it's slowing, but it hasn't stopped yet. People are still moving to states that they perceive as better run, and they're moving out of states that they think are badly run.
Okay, that's an interesting point. So I've got I just did a video. What did I do this last week? I think I did. Yeah, I launched one that is best in the Midwest. And I kind of hit on this idea in my latest video on the channel. The idea, which is, people have been kind of migrating since COVID when they could, if their job was remote, and he just said they're moving from states that are less well run to states that are better run. So you've seen a lot of people been moving to Florida and Texas, Nashville being another area. And leaving other states.
That's continuing, but it's slowing down because nobody can afford to buy the houses in the hot markets that they're moving to now. For the past 20 or 30 years, if you sell your house in California, you can pretty much go anywhere and buy a really nice house. But now home prices are starting to equalize. They're going up. Even in Nashville, for instance, is a super hot market in Tennessee, and a lot of other Tennessee cities are starting to boom.
So I went to school in Nashville. Nashville's 4 hours south of us. I went to university down there at Lipscomb University. Shout out Bisons. And I went down there recently. My uncle passed away and had a funeral down there, south side of Nashville, just south of Franklin. And driving through the city, I hadn't been down there in a few years. I was like, holy cow. Like, I had heard, that they had been growing, but I was like, oh my gosh, this is not the same city that I went to college at. It is very different. Development everywhere. There's cranes everywhere downtown. There's kind of sprawling neighborhoods. Now I'm like, holy cow, this is very different. Nashville. And Cincinnati is like kind of on the cusp above that, where you've seen a lot of growth. I keep saying this over and over again, but where you've seen a ton of growth in the last few years have been a lot of these Sun Belt cities. So Nashville and Austin and Atlanta and Phoenix and Florida cities, right? Orlando and Tampa area. But what does that mean for Cincinnati? Let's keep going.
And that always leads to higher prices. And in Florida and Texas, a lot of the formerly affordable neighborhoods aren't affordable anymore. So it's harder and harder to move to these places. Fewer and fewer people are doing it. And again, that's topping behavior. Once we reach the point where that rolls over and people actually start leaving the formerly hot states, that's when the real estate market really tanks.
All right, so you guys, we've kind of hit the apex, right? He's calling it topping behavior, where, okay, buyers are still coming. They still want to live there. They still like those areas, but the affordability is just hitting that top. And now it starts to go the other way. And that's, just imagine like a roller coaster, right? Tick, 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 tick. You're like right at the top. You could still jump in. People are still jumping in Florida, Texas, and then whoosh, it could be a free fall here.
Newsweek put out an article calling Austin, Texas, ground zero for the market downturn. First off, can you explain what you've seen there? And also, do you think other hot cities are going to follow? And how long will that take? Yeah,
Austin has basically been the hottest city in the country for the past decade or so. But inevitably, the pendulum swings too far. And Austin is now unaffordably expensive. And the prices of houses are starting to go down there. I don't have the exact number, but I think it's something like 15% from the peak. Prices are down in Austin.
So in Austin, prices are down 15% already. Very interesting.
And, there's an old saying that in a bull market, prices go up on the escalator. And in a bear market, they go down in an elevator. In other words, they go straight down when they start to fall. And yeah, we're heading for that in a lot of hot real estate markets where prices just start to gap down. And Austin is definitely one of those places. Some places, for instance, Ohio, prices there just aren't that expensive. So it's not going to plunge there, but.
Okay. That's what I wanted you guys to hear. I'm going to go back 15 seconds. Let's listen to that again.
In a lot of hot real estate markets where prices just start to gap down. And Austin is definitely one of those places. Some places, for instance, Ohio, prices there just aren't that expensive. So it's not going to plunge there. But in a lot of other places where home prices are wildly unaffordable, they're going to tank.
Okay. I'm going to say that again. I say this over and over. Like, I just keep having the same message over and over. I'm thinking of creating a video that's called Cincinnati is the most average city in the United States. And I mean that in the best way possible. But what he just said was like, hey, there are cities like Austin and Nashville that have seen a boom, and eventually they're going to bust and they're going to go down fast. That's already happening in Nashville, but that's not happening in Ohio because it's still affordable to be here. And we haven't seen that boom. We've seen steady growth. We've seen from 21, 22, and 23 was like the highest appreciation we've ever get. But I always say this to buyers. I say this to sellers. I say this to investors. I'm like, look, Cincinnati is so stable. We don't get too hot. We don't get too cold. So if you're looking to move here and you're like, I love real estate, I want appreciation, I want my house to go up. Or if you're someone who's an investor and you're like, I want to hit the city that's going to be the next big city, the next big thing, because I love appreciation. And then right before we hit that topping, that's when I sell off. If you like playing that game, Cincinnati's not really a great city for you for that, because we tend to be like, we follow the trends nationally, but we're always just lagging them a little bit. So whereas in other cities, you may have seen a steep climb, we've seen a gradual climb. And in other cities, you might see a steep fall, and we'll probably see a fall, but it's going to be a very gradual fall. Because part of that, I think, is offset here locally, because we are still a city where people can go to. So our median home price right now is $279,000. I think the national average is, I want to say $419, I think is correct. So we are, call it $140,000 under the not the national average. I think the median home price for the states is $420, and we are at essentially $280. And so we're still a place where, like, there's some people can still come here and afford a house. My buyers who went under contract this weekend, they're first time home buyers. They didn't have the strongest credit. Okay. Their budget, their ceiling was $250,000. We got them a cute renovated bi-level 3-bedroom home. Like, you can't get that in other places around the country. A lot of other places around the country, it's not even something that's heard of. And they're like, we're getting our own house. This is amazing. So, okay, we'll keep going here, but I wanted to specifically kind of drive that home where he's saying, like, yeah, there are places around the country that the bubble is like hitting its peak and it's going to pop. And then there's places like Ohio. And I was like, that's really interesting. I should share that with my
30, 40, 50% declines are going to seem normal at some point in the next couple of years. Prices there just aren't that expensive. So it's not going to plunge there. But in a lot of other places where home prices are wildly unaffordable, they're going to tank. 30, 40, 50% decline.
A lot of other places, he said, where home prices are unaffordable, they're going to tank. 30, 40, 50%
are going to seem normal at some point in the next couple of years.
Now, you argue that the traditional boom-bust resolutions aren't going to suffice this time around, in part because other costs are going up. What's unique about this bubble?
Well, as you mentioned, there are other costs of home ownership that have really spiked. That's part of the whole inflation thing. The cost of homeowners insurance is spiking, and home maintenance is much more expensive than it used to be. And taxes are going up. Property taxes are going up in line with home prices. So owning a home is not...
Inflation is terrible, man. Inflation sucks because it's not just the home price. What he just said was property taxes are going up because your home price went up, and now they reset here locally in Cincinnati. I want to say they went up like 30% this last year, 25 or 30%. And people are like, what? Like, they're freaking out. And then insurance has gone up, obviously. And then just the cost of repairs. And so everything has gone up, not just the cost of the home.
Only expensive because you have a high mortgage rate and the price was very high, but you've got insurance and taxes that are much higher than they used to be. So first of all, there's a lot of people who are priced out of buying a house. They can't do it. And then there are a lot of people who own houses, but can't afford to keep those houses. So add it all up and there's just a massive amount of inventory coming our way.
Now, I know that in the past few years
So he's saying, okay, a lot of people can't afford them, but a lot of people can't keep them. And so he's hinting at the fact that, yeah, maybe you got a house, but maybe because wages haven't kept up with all the costs of inflation, people are going to have to sell their house because of that. And so he's basically saying like, hey, look, there's an undercurrent, a glut of inventory that is coming. It's not maybe here yet, but it is coming.
Read that companies like BlackRock are buying up a lot of housing. And I imagine that's different from past generations. How widespread is corporate ownership of things like single family homes? And is that a big factor?
Yeah, it's not the dominant factor in housing right now, but it's a very big one. And like you said, it's a very new one. Two other new ones are Airbnb properties, and where people built little empires of condos and rental houses. They're not making nearly as much money off of them as they thought they were going to. And a lot of them are going to have to be dumped onto the market.
I've heard this a lot lately. Any of you out there, rentals of or owners of Airbnb, short-term rentals, trying to keep up and make money with them. It's not working like it was, getting more saturated, more competitive. And if you're not making money, those properties are going to sell as well.
And finally, baby boomers, we're retiring, and that 3-story McMansion with an acre of land to take care of just isn't as easy on our hips and knees as it seemed at the time when we bought it. So boomers are going to have to start selling their big houses and downsizing. So you take Wall Street, you take Airbnb and boomers, put them all together, and you have this massive tidal wave of
Wall Street. So we're saying BlackRock, yeah. Airbnb owners and boomers all going to be selling
homes that are going to hit the market pretty soon. And it seems to be, reaching kind of peak complexity right now, where home prices are starting to roll over. And the next year, the story is going to be, instead of high house prices, it's going to be all the discounts you can get.
Wow. No.
Very interesting, right? This is not, if you're a buyer, that's good news. I'm going to get back into the data in just a minute. We'll
Do you think there are going to be some areas that are insulated from price drops? I know, for example, in 2008, some places.
Are there some places that will be insulated from price drops is the question.
The price is leveled out, and other places it totally cratered. Where do you think is going to be relatively stable?
Well, the places that didn't boom in the first place. I'm hearing a lot from a lot of people who are moving to like Missouri, for instance, where prices are still completely affordable. And Ohio, as I mentioned before, same thing. So they're insulated from the worst of the housing bust because they didn't boom in the first place. And then other places that have some city specific or states.
Just want to say that again. He's saying Ohio is going to be insulated because we didn't boom. We went up, but we didn't boom.
Specific thing going on. Like, for instance, there's a lot of technology companies that are moving to the Phoenix area, and that will help support real estate prices going forward. In other words, they won't crash the way some other places will crash.
The jobs.
But just as a general principle, home prices will probably be going down irregularly in different places. But generally speaking, they're going to drop going forward, unless some really radical thing happens out there that's not on the horizon at all. So generally, if you've got a house now, your house will be less valuable in 2 or 3 years. And if it was wildly overpriced when you bought it, it's going to go down by a lot.
Well, John, thank you so much for coming on today.
Oh, sure.
That was financial analyst and author John Rubino. And this has been an extra edition of Morning Wire.
All right. Thank you, John Rubino. That was very interesting. Whoops. So, okay, I want to bring this back locally to Cincinnati and what that means, because it's a weird market right now. It's a weird market nationally, and it's a weird market even locally. But, overall, there are these pockets around the country that are hitting these tipping points that are going to go down probably substantially in the next year, 2 or 3. Okay. There are other pockets in this country. He mentioned Missouri. I'd probably throw out some other Midwest, Ohio, Kentucky, Indiana, maybe Michigan. There are some various other places around where homes are still affordable and didn't see as large of a boom. And so they won't bust as much either. And because home prices are still affordable there, you could see more and more people moving to those areas. Like people, if you're watching this, maybe I know a lot of people watch this and they contact us because they are moving from California, or they are moving from Texas, or from Florida, or from Nashville, or various places. And they're like, hey, we're living here and we got priced out. And so, we're looking for the next affordable city where, we can put down roots, we can start a family, we can buy a home, but we can't we can't afford these places anymore. That could be someone as a first-time home buyer, or that could be someone who's decided, hey, we're cashing out. We kind of rode the wave here, but we want to get out while the getting is good. Chris, what's up? I've been waiting since 2001 for prices to come down here outside of Cincinnati. Yeah, I'm going to get into, here's my prediction for Cincinnati. Like, I think what I'm feeling, what I'm sensing in the market, because we certainly are locally, we are seeing homes sit on the market longer. We are seeing more inventory. So some of these larger factors that he's mentioning, like the boomers, maybe not Airbnb as much. We have Airbnb here, but it's not like we are, or Orlando or like any kind of beach city or something like that, where you have a ton of vacation rentals. And then investment properties, same with that. Like the large scale institutional money has come in here some, but not a ton. Like mostly they hit those Sunbelt cities. Like I was telling you about. I read an article, I want to say 2 years ago now, like in Atlanta, where there was a real estate agent saying like 40% of the offers are from investment companies, cash offers. It's like, how are first-time home buyers supposed to compete with that? So, but we didn't see as much of that here. We saw maybe 10%, something like that, of offers coming from institutional money. So I think Cincinnati what we saw last year in terms of appreciation was between about 5 to 6%. The previous year was about there as well. And then 22, 21, and 20 were like around 10, like it was like 8, 10, 10 was kind of the appreciation. Now, are we going to see more inventory here? Are we going to see more price reductions? Yes, we are. Like we're already seeing that. So if the home is not priced right, if the home does not have a good, if it's not in really good condition, it'll sit for a while. And if you're out there shopping right now in Cincinnati, you're probably seeing that. You're seeing more than you've seen in many years, but nothing like probably what you're seeing in these other cities like Austin or Orlando or DC right now, or any other places where people are trying to sell, because there's a huge bubble that's now being popped. Now, on the flip side of that, we are seeing more inventory here locally in Cincinnati. We're also seeing homes that are priced right and are in good condition still get multiple offers. Like I told you guys to start off the show, I had 2 listings this weekend, and we priced them right. We marketed them well, where, we put them out there on the weekend. We had an open house. We had multiple offers on both of them. We probably had, 10 to 15 showings on both of them. And we saw, I think on one, we had like 5 offers and more were rolling in. Like we cut it off because we're like, we're good on that one. That offer is great. We're happy with that. And then the other one, like I said, I'm working with the sellers now to decide, hey, we've got, this is a very good situation. We have several very good offers. Which one would you like? That's not happening in these other cities, but it is still happening here locally. Now I would say that's more rare. Like we're not typically when I'm representing buyers, I might see a situation like that where you're seeing 1, 2, maybe 3 offers. Whereas in 2022 and 2021, it was very common to see 8, 10, 12, 15 offers, and you're going 20, 30, 40, 50 over ask price, and you're waiving inspections and you're putting in appraisal gap clauses. We're not seeing that right now. So it's kind of a weird market. There's like some properties that will still go really fast. And if you look at them, if you're shopping the market, you'll know, like you'll see like, oh, that one looks cute. Oh, that one's pending. Like that's still happening. And then you'll see, a split where the other ones are like, oh, that one's been out there 2 weeks, 3 weeks, 4 weeks. Oh, there's a price reduction. And there's more and more of those. And it's I tell all my buyers this when they're shopping, which is like, those 2 houses are very different to shop for. And when we represent you as your buyer's agent, we're going to take very different approaches on those. If the home's been sitting out there for quite a while, great. Okay. We probably don't have any other buyer competition. If they haven't dropped the price in a while, we're going to come in there under ask price. We're going to see how motivated that seller really is. And we're going to see what kind of deal we can get on that property. Versus if it's one of those other ones that's like the one I got my first time home buyers this week, they didn't have any other offers, but the agent told me like, yeah, there's like 4 or 5 people who said they are writing. And I kicked it into gear on Friday night. I'm like, okay, we've got an FHA buyer. We've got it. We had to have settlement costs on this one, paid for by the seller. And so I was like, the the negotiator in me turned it on hardcore. I'm like, what do we need to do to get this done? I'm talking to the agent. I'm like, hey, if we came in here and if we offered you this, would that work? Can we get it done tonight? And he was like, well, I don't know, maybe, like, there's other offers. And that's typically where sellers have been. Like, I don't know, we're in full control. But in this case, it was like they had people sniffing, but they had nothing in hand. So I freaking got that offer in his hand in like 25 minutes. Like I went to town working on it on a Friday night. My kids are watching Survivor down below and dad's upstairs cranking out an offer, because I'm like, this is an opportunity. I know this is a good house and this is a good price and we can get this one. And sure enough, we got it like for their price. We got it accepted that night. And because I knew if we waited till the next day, we would have been competing with other offers. And with the financing that we had, like, that would have been a challenge. That would have been a challenge to get that house. So it's a very different, like, this is why you need to have someone who knows what the market is like working for you, but it's very different based on the situation, and every situation is different. So yeah, Chris, will prices be coming down here outside of Cincinnati? No. Or if they do, they're not going to go down much. They're going to go down like a little bit. So that's just kind of where Ohio is right now. Yes, home prices have gone up, but like, if the bubble in Austin's like up here, our bubble's like down here, right? I'm trying to do this. Maybe there is a bubble, right? We have ridden around with the others, but like, if it bursts, and it definitely could burst this year. I'm not going to say that it can't, but it's not going to have as big of an impact. And that's the same thing that happened with the Great Recession, which was like, we had a burst here, but like, it just wasn't felt as strongly as other cities around the country, because we kind of hover. All right, we don't get too hot, we don't get too cold here in Cincy. All right, so let's get into, whoops, let me add this up. All right, I want to go through these a little bit more here. So home prices we saw, inventory. This is, again, these are national charts. Okay, so this is not local Cincinnati charts. So this is the prediction of what's going to happen. So we were now Cincinnati was definitely feeling this inventory. In fact, we were kind of there was a couple articles at the time where for several months in a row we were the fastest selling home market in the nation, because our inventory was so low. And really, what you're gauging there, you're gauging like, do I want to live in that city? Yeah, maybe the prices are cheap and maybe like I can get something to afford there, but do I actually want to live there? That's the video I just put out there. It's like, if you are looking to move to one of these Midwest cities because you're getting priced out of these different areas, or you're trying to sell before the bubble bursts, well, you want to pick a city that like you want to live in, right? It's not all about, excuse me. It's not all about price, but it is about lifestyle, and it's about amenities, and it's about safety, and it's about schools, and it's about, sports teams and art, and, the art scenes and museums and the parks and all that stuff. Like, is it a good city to live in? So please go check out that video I did. I'm pretty proud of it. We got some pretty cool shots of the city. We went around town, Music Hall, P&G. We went up to Devou Park. We were at, where were we at? FC Cincy Stadium on the west side, or West End. We were, we were Smale Park. We were Washington Park. We were all over the place. So you get kind of a feel of the city watching that video. All right, let me get back to this. All right, so inventory is expected, you can see here, from 23 to 24 to jump up from 3.1 to 3.7 annual month supply of inventory. So, and a balanced inventory is 6 months. So we're still below that nationally, but they're expecting this to go up this year. All right, let me keep going here. Okay, mortgage rates. Let's talk about this for a second. Yes, mortgage rates are higher than they were obviously in 2020, 2021, where we got spoiled. I'm just going to say it. You got spoiled. Okay. We all got spoiled. 4%, 3%, 2%. And that's not where things have been. And we were spoiled since the Great Recession, right? They came down after the recession and they kept going down to that low point in 2021. Now they've bounced back up. We're in 2024, the average was about 6.7. In 25, they're projecting them to be about 6.5. But what I want you to see here is the fact that, the average from the historical average from 90 to 24 was 6%. And the historical average from 1972 to 24 was 7.72%. I think people are understanding this now, that this is more of a, yes, they're super high compared to a few years ago, but they're not crazy high historically speaking. So yeah, but the combination, I fully understand, like the combination between higher mortgage rates compared to a few years ago and higher, like way higher home prices, because because inflation drove up the home prices. That combination is making the affordability unattainable for so many people. I get that completely. Okay, so let's move on here. That's kind of what they're guessing. This is an interesting chart, I thought, and this number was even higher last year. I think it was 78% last year. This year, it's 74% of mortgages have rates of 5% or less. So 22% of people have 3% or less. Good for them. 34% are 3 to 4%, and 18% are 4 to 5%. You add that up, and you have 74%. Now, but the number, 10% are 5 to 6, and 16% are 6%. Kind of what's important to note here is that every single mortgage that's being bought right now is above 6%, and so that 16% is growing. And so basically the point I'm trying to make is the number is going to be more normalized in that 6% range, that 5%, 6% range. As more and more people buy houses each year, that number is going to increase, and the under 6% or the under 5% is going to decrease kind of each year. So I just thought that's a really interesting stat. Here's that affordability we talked about before. Home sales in Canada. I don't want to show you guys that. GDP. This is just again, understanding what's happening and what's predicted economically is important. I'm not going to do a full economics session. You probably don't want the guy who calls it macroeconomics to teach you macroeconomics, because that's not a thing. GDP quarterly, unemployment. Unemployment has been lower again, and that again, all this matters. And so if you're looking at going back to the audio we were listening to before, like which areas are going to be, which areas are going to be more recession proof? Well, wherever there's more jobs, those are more bubble burst proof, right? Those are more, but where jobs leave, where people leave, and there's more inventory, high supply, low demand, that's when prices drop. Yeah, absolutely. Amir, tariffs could cause price hikes again. The tariff, yeah. I think a lot of people don't know exactly what's going to happen with the tariffs, and how serious Trump is with these. I think I heard a really good point about him. He definitely likes to, I think it's clear by now that when he negotiates, he likes to come in strong. He likes to position when he negotiates. So, but also I don't think I heard someone say this last week that he doesn't bluff. Because if you thought he was bluffing, you'd be like, oh, he's bluffing. But like Trump, it seems like, and I'm not, whatever, this is not a political show, but I do think it's interesting economically and from a negotiating standpoint. It doesn't seem, I kind of agree with his take where I don't think he bluffs. I think he just changes his mind. Like when he says like, I love the word tariffs, like tariffs is a beautiful thing. Like, I think he believes that. And then if he sees tariffs come out and the market crash, he's like, oh, I don't love tariffs anymore. Like he seems like he more shifts with what is working and what's not working. But he certainly, when he negotiates, he does know how to negotiate. I mean, if you can say what you want about the guy, but the guy knows how to negotiate a deal. So I think, yes, tariffs could definitely have an impact on housing. I mean, the price of materials, certainly there's no question that tariffs are an important part of this conversation. California houses. I'm not sure exactly what that was in regards to, Max. Let me know. Leave another comment. But okay, let's keep rolling here. Okay, so unemployment. Oh, California home prices stinks. Yeah, I thought that was an interesting point in that audio where he said you used to be able to sell, a California house and then buy wherever you want. And that's kind of getting more normalized. And I think, California is one of those areas where prices seem to be coming down, I believe. Okay, let's keep going here. Unemployment, personal saving. This is one I wanted to show as well, which is just, again, because of the inflation, because of all the costs being higher, personal saving rates are just very, very low. Now, we had a low point in 2020. Then like the government gave out a ton of money and people are like, hey, we have savings. But, historically, again, that rate's around 5%. Or 8% going back into back to 1959. Currently, that's 3.8%. So again, can people save up? Can they save up for a down payment? That median, that average, the medium price home buyer price was in the 50s, low 50s, and the average first time home buyer is 38. Again, that number is just blowing my mind. That it's that high. I never would have guessed that. We hit inflation earlier. Here's risks to 2025. Yeah, trade, immigration, regulation, spending, natural disasters, international conflict. These are all economic risks. Here's actually, if you guys want to pause this, I'm not going to spend a ton of time on this, but yeah, there's no question that trade policy and tariffs can have an impact on housing policy. Or the housing market, I should say. I had this. Give me 1 second here. I'm going to present something different because I had one of these edited. It's this one. And bring this up. Okay. So where were we? Okay. There's a few other things I want to show you guys here. This one I have edited. The other one uploaded all the slides there. Okay. Forgive my production value again, guys. I'm just a real estate agent here. I'm not a full-time podcaster. Okay. But let me pull this up. All right. US events. Here, let me do. Okay. I want to show this. Okay. This slide was very interesting to me in terms of pricing. Let me just see if I can't maximize this. I don't know why. Let me go here and do. Okay. So this is percentages of listings with at least one price drop. Now, what's important to see here, what's going on here? There we go. Is one thing that stands out to me in this chart is that January of 24, January of 23, typically January is the floor of the year in terms of price drops, right? So you see, in February, March, April, May, that number is going to go up throughout the year and kind of peaks in October, November, and then comes down December, and January is a floor. And one thing that I want to just point out here on this is that the January of 25 is nearly as high as a lot of 24 in terms of the number of homes with the number of listings with price drops. So if this is a floor, right? Last year went from 24% up to 36. So you could imagine in January went from 9 to 29. It went to 20. So that's 12 to 20%. Let's call it a 14% average. You can imagine that if this is the floor, you could see 45% of listings have a price drop in 2025. That's pretty massive, right? That's where we're talking about a bubble, where if this was the number, this is the actual number. This is not a projection. This is the actual number for January of 25. And if that was 31% of homes that had a price drop, now we know we've kind of topped off. And so now again, where is that happening? We are seeing more of those here locally, but there are some markets who are like the majority of homes are seeing listings with price drops, right? Because it's a race to the bottom. Where like when you're in a market that's falling, you can't keep your price higher because your neighbor is going to undercut you, right? The similar comparable sale is going to drop their price, and now you're left stranded. And so it goes down fast. And so we're going to see if this is 31% in January, like you could easily see that being 40%, 45% of homes that. So this is, again, so if you're on the sell side, whether you're here locally or in another city, make sure. And by the way, guys, we work with, we have a referral network where if you're somewhere else around the country and you need to sell a house, we can, we can gauge which agents are the top producing agents in that market and send you a referral. But you need to be sure you are working with a listing professional, especially if you're in a market where prices are coming down. That is so important here. So if you have an HO, if you have a home, does an HOA go away eventually? If you have a home with an HOA, the California home price index. I'm trying to put pieces all together, Max. I think that's what you're saying. Doesn't HOA go away eventually? Yeah, maybe. Okay, so this slide was really important. I wanted to show you guys that one. All right, where are we? Okay, new listings. This is another one I wanted to show you. Again, if January is somewhat of a floor of the year, right? You look at January 24, you look at January 23, you're going to see more and more listings come up generally in the spring. Most markets, you get most of the listings in the spring and early summer. And look where we are at in January of 25. Again, nearly peaks, almost some of these peak months of 24, but well above. You had 325,000 listings in January of 24. You had 301 in 23. You had 406 in 25. That is a huge increase. And so again, you're going to see a lot more inventory hitting the market. So if you have been a buyer, it's been waiting. I mean, this year and next year, you are probably going to start to see more inventory on the market and prices, start to come down a little bit. I think you will start to see that. Or at least here locally, at least see them levelize. I kept this in just because I found this interesting. We haven't seen a ton of distressed sales yet, meaning foreclosures, homes like that, short sales. We saw obviously a ton from 2008 to 2012, and then it kind of started to come down after that. And a big reason is why so many people have equity in the home. They're not getting foreclosed on because they can sell that home in different ways, or they can take out a home equity line or something like that. But I think that will be rising. It's just something to keep an eye on here. Same thing here. The homes just haven't been underwater because the prices have gone up so much that they've had the equity. Student loan debt. At 24 in 2024 was 1.6 trillion. All other debt 3.4 trillion. So I think here, this slide is just something to keep an eye on. Again, it's just where are people's savings at in terms of affordability to buy houses as debt, as everything is more expensive, groceries and insurance and taxes and you have these inflation costs hitting you. It's just hard for people to save. Look at how much home insurance has gone up the last 2 years, right? Just jumped 9%. Here's a chart that's showing 2023 non-renewal rates. So you can look at these different states: California, Florida, North Carolina, Louisiana, Massachusetts, where you see a lot of people non-renewing their home insurance. Even Oklahoma is pretty high. Again, these Midwest states, I think it's just really interesting where it can get more affordable. You're not seeing that as much. I'm not going to go into this too much, but I thought because he hit out on it in the audio, the idea of the boomers, people who are over 55, they own 73%. Oh, sorry. They actually own 85 trillion in assets, which is about 50% of all the U.S. assets, and 19 trillion of that is in real estate. I find this is a really interesting thought. If you're in this category watching this, I'm curious, boomers, to hear what you say on this. But this, they ran a survey and said 73% of people over 55 say they want to give all or some of their estate to their children before they die. On average, they want to give away 30% while still alive. So I think the idea behind this slide, and I think he's even got one here, an example, is will boomers be potentially buying more houses for their kids and grandkids? Because they've seen all of the growth in their assets, and they're experiencing the benefits of that. And they might be seeing, the struggles of their kids and grandkids not be able to buy a house. And now, could you do that in a tax effective way where you're using your annual gift tax of $19,000 per person? And, you could do $38,000 if your kids are married. And then if your spouse does it as well, you can do up to $76,000 a year. So could you buy, an example of buying a child a $500,000 home, and then you put it on a loan, and then you give them a gift each year, so you're not paying any tax. So you're basically essentially being able to, transition your estate to your kids tax-free. Obviously, I'm not an accountant. Contact your CPA if you're interested in something like this. But I'm curious what you guys think. Like, do you think something like this will happen more, where more of the older generation says, yeah, I could die and you can get all the money, or I could help you out now because I realize the economy's tough, and we'll help you buy a house now. I'm very interested to see if that happens, as the boomers continue to age here. Lucky 13, what's up? Are you seeing a similar percent of increase in new listings here in Cincy as a national data? Maybe I'll follow up on that next week and bring those charts. The answer is yes, we are seeing an increase in listings, but no, not to the extent yet on the national level, if I'm going to feel that out. So we are seeing inventory creep up. Again, just remember, like, everything around Cincinnati, Northern Kentucky is just like a little bit behind. So like, and as you guys read any kind of national real estate headlines, just discount it by, like, I don't know, 30 to 50% in your mind of what that means for here locally. That's totally a rough number. So don't take me to the bank on that. But like, yes, we are seeing more listings, but not like a flood of them. Okay. So we're feeling it. Like, I feel like we're hitting our top as well. It's just like, when we hit it, I don't think it'll crash quite as fast here. I think, like, if I were to put a guess on it, like last year we were around 5-6% appreciation. The year before we were around 5. I think this year will probably be around 3 or 4. Like, that's my guess on where we'll be. Maybe 2 to 4, something like that. If because the other component about Cincy, again, is like, it's not a flood of people coming here. We're very stable economically, but we are one of those cities where we're cool enough. Like, we're not like super cool. We're not like the hippest of cities, we don't have mountains. I say this all the time. We don't have an ocean. We don't have mountains. We don't have like some crazy tech startup culture. We're not Vegas. But we're like pretty good at everything. Like, this is why I've got to make this video. Yeah, you're absolutely welcome. I need to make this video. We are the most average city in the United States. Like, it's true. Like, in terms of home prices, like, we're right at the median. Like, in terms of, salaries, we're right at the median. In terms of like professional sports, we got professional sports. They're like pretty good. Like, but we don't win championships. Like, you're not going to get that here. We don't win championships, but like, they'll get you like a little bit over 500 to make you feel like, we're all right. We're doing okay. We've got good parks. We've got cool museums. Our food scene is like pretty good. We got good breweries. We're not like the best at anything. It's the one thing I would say, like, we are the best at is, like, this is a place to put down roots, like, and build a family. Like, I would put us up against anyone in the nation for that, in terms of being a city where, like, if you want to raise your kids here, if you want to be around your grandkids, this is a place to do it, because, like, we keep finding this little pocket of obscurity where like the national trends always like fly over us. I mean, we're literally in flyover country, right? but like we don't get too hot, we don't get too cold. Your kids can find a job here, they can buy a home here. If you want to be around your kids and your grandkids, this is a great city for that. And I will go to the grave saying that. And that's why I have my 5 kids here and why I'm building a house where all my grandkids are going to be around it. Like, because I'm like, this is the place. That's what we're the best at. We're the best at that. So Cincy, great. Just move here from out west. Right on. Where'd you move from, Max? But yeah, you know, some people are going to find us and they're going to be like, this is pretty cool. Other people are going to be like, Cincy, like they're going to snub us. And, you know, a lot of people locally are kind of like, you know, we wish we had a better reputation nationally. And I'm just kind of like, yeah, I know what we got. And other people, the other half of people are kind of like, no, we're cool. Like we know what we got here. It's pretty awesome. So anyway, that's Cincy. I'm the most average. Is that, what do you guys think of that? Are we the most average city in the United States? I think that fits. That's not meant to be a slight. Okay. Last chart. And then I'm going to sign off. What time is it? Oh shoot. We're over an hour. So, sorry, I'm going long tonight. And I need to call my sellers. Okay. So first time home buyers. This last thing. Oh, you guys can't see it. Hang on. Okay. First time home buyers. Last chart I want to show you guys. Again, really, really interesting to me is the lowest we have seen in 25 years was last year. The percentage of home buyers that were first time home buyers was 24% last year. Again, affordability, home prices, interest rates higher, wages not keeping up, and that's what you get. So again, this is why I say, if you're trying to crack the market, if you're trying to acquire assets, if you're trying to not give up on the American dream completely and just rent for the rest of your life, like for first-time home buyers, I'm like, get over here and get here quick, because I know we're average and like people are kind of overlooking us now, but that could change. Like Joe Burrow knocks off a couple of Super Bowls. All of a sudden, like we're the cool kids on the block and now we're the new Nashville or Austin, Texas or whatever. I think that could happen. I think people could wake up to that. We have all of the foundational elements in place to blow up and go on a boom. It just hasn't happened yet. And so I'm like, first time home buyers, I know if you can't buy somewhere in Florida or Texas or California or Colorado or, you know, wherever you want to go, come here. Like you can buy a home here. It's pretty awesome. You can start getting some equity. Sweet. Max, appreciate you jumping in tonight. Hey guys, thanks for watching as always. Hope this was helpful for you. If it was, before you check out, click that thumbs up button for me. Leave a comment because that really does help it get out to more people. You know, let me know what was the most helpful thing for you tonight or unhelpful. I don't know. You can yell at me, I guess, in the comments if you want to do that. But I appreciate you guys as always for tuning in. We are getting so close to wrapping up our home edition. So this studio here, my office here in Cincinnati is going to be making its way back to Northern Kentucky very soon. Very excited about that. And I think I'll be able to be more consistent on these lives going forward, trying to bring you guys these data points and kind of market updates so you can get a handle on it. But I love doing these. We'll bring you more news about the city and all that good stuff too. So hope this was helpful for you. You guys have a wonderful night and have an even better week. And we'll see you next time.